August 2025. Trade between China and Russia takes a sudden dive.
China's yuan-denominated exports to Russia in August saw their biggest drop since February.
Chinese exports to Russia dropped by over 16%, while Russian exports to China fall nearly 18%. For a relationship once hailed as a lifeline, these numbers aren't just troubling, they're a warning. Something is breaking. And yet, just weeks later, Vladimir Putin is in Beijing. He walks beside Xi Jinping at a high-profile military parade. The red carpets roll out, cameras flash. The choreography is flawless. From the outside, it looks like unity. Two giants standing firm against the West. But behind the optics, the cracks are widening. Trust is fading. And China is slowly stepping back, leaving Russia more isolated than it's been in decades. This is not just a slowdown, it's the beginning of a geopolitical unraveling. This fracture isn't a petty disagreement, it's a strategic shift with real consequences. You see, for years, Russia leaned hard on China to stay afloat under Western pressure. After the full-scale invasion of Ukraine in 2022, Moscow faced sanctions that cut deep. Europe slashed energy imports, the US froze assets and blocked tech, and Russia's access to global finance, machinery, and consumer goods collapsed almost overnight. Facing total collapse, China became its lifeline as Moscow quickly rerouted its trade eastward. Chinese companies filled the gaps left by Western firms, and Russian oil and gas flowed into Chinese ports. In return, electronics, vehicles, and industrial parts poured into Russia. Shelves that had gone bare were restocked. The Kremlin called it a pivot to the east, and for a while it looked like that pivot had legs. By 2023, bilateral trade had hit record highs. Russian exports surged. Chinese imports stabilized the domestic market. The two governments praised each other publicly, signed new energy deals, and talked about building a multipolar world. It was framed as a long-term realignment. But today, that momentum has slowed sharply, and the numbers show it clearly. What was once painted as a blooming trade relationship is now losing steam. But what could have gone wrong in just a few short years? Well, the reason is simple. China already bought what it needed. In the first 2 years after the war in Ukraine began, China rushed to grab cheap Russian oil, gas, and coal. It also sold Russian consumer goods, cars, and electronics to replace what Western companies had left behind. But now China's domestic energy reserves are full. Its strategic stockpiles were built up during the discount window. And with its own energy transition underway, more solar, wind, and domestic refining capacity, it simply doesn't need to keep buying at the same rate. Russia is finding out the hard way that China is not going to expand its purchases just to save Moscow's economy endlessly. And that right there is where the illusion cracks. The public shows of unity, the talk of friendship without limits, and the endless pipeline announcements are designed to give the impression that Russia has a reliable partner. But beneath the stage lights, the relationship looks very different. China is careful, cautious, and unwilling to stick its neck out for Moscow when the costs are too high. And right now, those costs are super high and rising. Let's quickly look at why there's a high price to pay for Beijing's loyalty. At the center of that pressure are sanctions. Not just the ones that have been in place since 2022, but a new wave that's changing the rules entirely. Under Trump's latest push, the United States has expanded its sanctions to target not only Russian companies, but also any foreign firms that help them stay afloat. That includes Chinese banks, manufacturers, and tech suppliers. If they provide Russia with semiconductors, advanced machinery, or financial services, they risk being cut off from the global financial system. And for Beijing, that threat is real. Trump is not known to joke around with his threats, and President Xi is fully aware of this. One wrong move and Trump's hammer will come down on Beijing. If it were any other time, maybe, just maybe, China would resist more. But right now is not a good time for them to upset Trump. You see, China's economy is already under strain. Simply put, growth is slowing, and the entire economy is in mayhem. The property sector is in crisis, youth unemployment is climbing, and everything else is just on fire. Its banks rely heavily on access to the dollar system, and its biggest exporters depend on Western markets to stay profitable. The idea of being locked out, of seeing its tech firms blacklisted, or its financial institutions frozen, is not something Beijing can afford to gamble with right now. So while it continues to buy Russian oil and gas at reduced quantities, it's gradually pulling back from everything else. Deliveries of sensitive equipment have slowed, and big infrastructure projects are being delayed or quietly shelved. Chinese banks are tightening their compliance rules, making it harder for Russian firms to move money or secure credit. Even joint ventures that once looked promising are now stuck in limbo. The reality is that all this pressure has resulted in a shift in tone. What was once bold cooperation is now quiet hesitation. And you can't blame China for that. Even beyond trade and banking, another sign of retreat is happening in technology. Carefully but unmistakably, Chinese tech firms are slowing or canceling joint research projects with Russian partners. Co-development agreements in AI, robotics, and telecommunications that once signaled deeper cooperation are now being reevaluated or just dropped altogether. The reason isn't just fear of sanctions. It's that China doesn't want its most advanced industries linked to what it sees as a faltering partner. Access to Western tech remains critical for Chinese innovation, and any perception that Chinese companies are passing sensitive systems or know-how to sanctioned Russian firms could trigger blowback from Europe or the US. Beijing isn't willing to take that risk. On top of that, Russian demand for high-end chips, AI infrastructure, and cloud systems has grown. But the supply from China is shrinking, not just because of pressure from Washington, but because Chinese companies know the cost of being caught. In some cases, they're routing tech deliveries through third countries or scrapping the deals entirely. This is a form of quiet decoupling. Not announced, not acknowledged, but already reshaping how the two countries collaborate. And for Russia, losing access to advanced tech may be even more damaging than losing the markets. It slows innovation, weakens its defense industries, and deepens the very isolation it hoped China would solve. Trump's strategy is clear, and it's working. He wants to make the cost of helping Russia higher than the benefit, and he's not just relying on quiet pressure. In September of 2025, he called on NATO and the European Union to impose steep tariffs on Chinese goods if Beijing continues buying Russian oil. He's also pushing for secondary sanctions that would hit Chinese firms directly, including those involved in energy, finance, and tech. It doesn't take a genius to figure out the message that Trump is sending. Basically, if you support Moscow, you will pay the price. At the same time, Europe has been sharpening its stance towards Beijing as well. While European leaders still try to keep diplomatic lines open, there's growing concern over China's quiet support for Russia. The EU has started coordinating more closely with Washington on secondary sanctions and tightening export controls on sensitive tech. Even countries like Germany and France, once cautious about confronting China, are now warning about its dual role, one foot in the global economy and the other backing a sanctioned regime. This shift hasn't gone unnoticed in Beijing. It's one thing to brush off pressure from Washington, but risking trade tensions with the EU, one of China's top export markets, is a different matter. That's risking a 500 billion euro market. For Chinese officials focusing on stabilizing growth and avoiding more economic turbulence, that's yet another reason to dial back risky moves in support of Moscow. That decision is also shaped by how Russia's war is viewed at home by the Chinese. While Chinese state media avoids outright criticism of Russia, it rarely celebrates the war either. Online sentiment tends to focus more on China's economy, local jobs, and housing. Among young people, support for getting too close to Moscow is lukewarm at best. There's no public appetite for being dragged into someone else's conflict, especially one with no clear win. It seems no one in China is rushing to push Russia over. Right now, the whole country is focused on self-preservation. That's why China's leaders are now starting to fully focus on stabilizing their domestic economy, not propping up a country that's becoming more of a liability than an asset. All that being said, this doesn't mean that the partnership disappears overnight, but it does mean China is drawing clear boundaries. And the more pressure Washington applies, the tighter those boundaries become. For Russia, this is a dangerous reality. And for Putin, well, he's probably crying in bed about it. The entire pivot to the east was built on the assumption that China would always be there, ready to buy, sell, and invest, no matter what. But that assumption is collapsing, leaving Russia so exposed. He's only realizing now that China will help when it suits its own interests, but it will not bleed for Russia. Not now, not under this kind of pressure. And as if this situation isn't bad enough, China isn't the only one stepping back. Other major Russian partners are pulling back too. India, once one of Russia's biggest energy lifelines after 2022, is now also cooling the relationship. Between May and August of 2025, Indian purchases of Russian crude fell by more than 30%, with spot cargoes nearly halving in volume compared to last year. Long-term contracts are being quietly renegotiated, and new deals are stalling. Some Indian refiners are demanding steeper discounts, while others are shifting more volume back to Gulf suppliers. The reason? Risk. Secondary sanctions are starting to bite. Financial institutions, insurers, and shipping firms involved in Russian oil transactions are under growing Western scrutiny. For Indian businesses, the cost of association is going up, fast. It's pretty much the same situation that China is in. But unlike China, India doesn't have the scale or strategic ambition to absorb that kind of pressure. It trades globally, And Western markets still matter far more to Delhi than discounted oil ever will. So while Russia once saw India as a dependable fallback, the numbers now tell a different story. The support Moscow once counted on is turning more transactional by the day. That shrinking market feeds directly into the bigger picture. The so-called pivot east, once framed as Russia's escape from Western isolation, is now losing momentum. China is drawing boundaries, India is hedging its bets, and sanctions are biting harder. This leaves Russia with fewer and fewer options. This energy squeeze exposes the core vulnerability. Russia, once Europe's dominant supplier and a heavyweight in global energy markets, now finds itself dependent on a handful of buyers, each more powerful than the seller, and nowhere is that imbalance more visible than its relationship with China. The truth is that despite the slogans and the staged photo ops, the bond between Moscow and Beijing has never been equal. The history is layered with rivalry and mistrust. In the 1960s, the two clashed along their borders. For decades, they competed for influence across the communist world. Even today, beneath the surface of strategic coordination, the power dynamic is unmistakable. China is a global manufacturing giant, the world's second largest economy and a rising diplomatic force. Russia, by contrast, is increasingly reduced to exporting raw materials and importing the technology it can no longer source from the West. China fills that gap, not out of loyalty, but out of leverage. And it is precisely that leverage that defines the relationship. If you've watched Suits, Power, or Game of Thrones, you'll know that leverage is everything, and frankly, China has choices. It can buy oil from the Gulf, coal from Indonesia, and gas from Central Asia. It can sell its goods to Africa, Latin America, Europe, and beyond. Russia, meanwhile, has been pushed out of Western markets, sanctioned into isolation, and now depends heavily on Chinese demand to keep its economy breathing. That's not a partnership. It's a hierarchy that has Beijing at the top. And it's not just Russia that experiences this. Across Africa, Southeast Asia, and parts of Latin America, China's playbook looks similar. It extends loans, builds infrastructure, and opens markets, but always on terms that protect Beijing's interests first. Countries like Sri Lanka, Kenya, and Laos have learned that Chinese support often comes with fine print, dependency without the ability to negotiate. In every relationship, China maximizes leverage, using its scale, capital, and diplomatic weight to shape outcomes on its own terms. With Russia, the difference is that imbalance is now public and growing sharper by the day. And the imbalance doesn't stop at trade, it spills into geopolitics. Central Asia, once firmly within Moscow's sphere of influence, is now being reshaped by Chinese investment. Through the Belt and Road Initiative, Beijing has invested billions in Kazakhstan, Uzbekistan, and other regional countries. Roads, railways, and pipelines are being built with Chinese money, creating long-lasting relationships. On the other hand, Russian influence, once backed by military presence and historical ties, is fading. Leaders in the region still meet with Moscow, but increasingly, they look to Beijing as a more stable and generous partner. For Russia, it's quite humiliating. All Putin can do is sit and watch China take over a region that he once dominated, all without ever firing a single shot. Even when it comes to military support, the limits of Russia's partnerships are clear. While joint exercises and diplomatic meetings with China get attention, the reality is more complicated. Russia likely wishes China acted more like North Korea, bold, confrontational, and willing to send weapons in its fight against Ukraine. But China has drawn a clear line. It will not give Russia lethal aid for the war in Ukraine. Even though the two countries call their relationship a no-limits partnership, Beijing is careful not to go too far. Sending weapons would risk serious Western sanctions and hurt China's important economic ties with Europe and the United States. North Korea, on the other hand, faces none of those pressures. Already isolated and under heavy sanctions, Pyongyang has consistently sent artillery and missiles to help Russia's war effort. For North Korea, backing Russia is a way to gain influence, show defiance to the West, and strengthen its position. It has little to lose and sees confrontation as part of its strategy. The difference is clear. North Korea takes big risks because it has little to protect. China is much more careful because it has global interests to defend. Russia may want China to offer more direct help, but Beijing has made its choice. It won't pay the price for someone else's war. YouTube just dropped a mind-boggling announcement. It is paying creators $64 million per day. Why? Well, because YouTube doesn't have enough creators. That is why you see videos on your homepage that have less than 1,000 views, like this one. Now, of course, that doesn't mean everyone should start a channel, but if you've ever wondered about starting a YouTube channel or a faceless channel, now's kind of the perfect time. YouTube is paying creators millions every day, and it's pushing newer, smaller channels now more than ever. But I'm sure you have many questions on how to get started and grow a channel. We get questions in our email all the time from some of you guys. And that's why we've decided to put all of our YouTube advice into one YouTube video for completely free. So, if you are someone who's interested in starting your own YouTube channel, you can watch that video here on YouTube by clicking on the link in the description or the card on your screen. The same imbalance plays out in infrastructure. The Power of Siberia 2 pipeline, often celebrated in Moscow as a strategic breakthrough, is in reality a deal shaped entirely by Chinese interests. With China as the sole buyer, it controls the pace, the terms, and the price. While European nations once paid over $400 per 1,000 cubic meters for Russian gas, China pays closer to $270. That difference isn't just economic, it's leverage. Perhaps it's part of why Beijing shows no urgency to accelerate the project. Construction remains slow, financing is vague, and timelines keep on slipping. For Russia, the pipeline is a lifeline. For China, it's a flexible tap, one of the many energy options it can afford to delay or downsize. Contrary to popular belief, the pipeline is not a symbol of equal partnership, but instead it is a quiet reminder of dependence. Russia may tout the deal as proof of resilience, but behind closed doors, they know the truth. China is buying cheap, dictating terms, and holding all the cards. All of this adds up to a relationship held together by appearances more than substance. In public, it's framed as a bond without limits. In practice, it's full of caution, conditions, and quiet retreat. Russia may present itself as China's closest allies, but behind closed doors, it knows how exposed it truly is. Beijing, meanwhile, is playing the long game. Its approach to Russia is not built on loyalty or shared ideology, but built on strategy. The image of two leaders standing shoulder to shoulder sends a message to the West. But behind the scenes, China is calculating its own risks. And the math is actually pretty simple. Take what's useful from Russia, but avoid being dragged into a confrontation that could threaten China's own stability. And again, that doesn't mean China walks away entirely. Energy will still flow, goods still cross the border, and high-level meetings still produce glowing statements. But when it comes to real commitments, China is cautious. Everything is calculated to avoid crossing the line that would trigger secondary sanctions. This is where the myth of this seemingly perfect partnership begins to unravel. What we're seeing instead is carving out of a middle ground, just enough to keep the relationship alive, but not enough to be dragged down with it. That middle ground leaves Russia frustrated. From the Kremlin's perspective, they expect active support, but all they get is diplomacy, limited trade, and a growing sense of isolation. Each time a new deal is announced, the fine print reveals the truth. China benefits far more than Russia does. This growing dependency is one of the sharpest cracks in the relationship. It's also a reminder that the two countries are on diverging paths. China wants global influence, balanced diplomacy, and economic leadership. Russia has chosen confrontation, isolation, and defiance. Those paths only overlap for a while. Eventually, they pull apart. And they are already pulling apart. The unraveling of the China-Russia partnership is no longer just a bilateral concern. It's a signal to the rest of the world that the alliance, once feared as a rising counterweight to the West, is far weaker than it appeared. What appeared to be a united front is now revealed as a cautious arrangement, shaped by imbalance and self-interest. The shift is already reshaping global perceptions. Russia, once positioned as a central energy supplier and geopolitical heavyweight, is now seen as increasingly isolated. Its economy is constrained, its diplomatic leverage diminished, and its list of dependable partners is growing shorter. That leaves Moscow chasing smaller markets with limited capacity and little strategic depth. The result is what we've seen these past years: a scramble to sell oil and gas at steep discounts, just to keep the war machine funded and the domestic economy afloat. But the margins are shrinking, and the infrastructure needed to expand into new regions simply isn't there. Latin America, Africa, and parts of Asia may take some shipments, but they cannot replace the scale of what Russia has lost. And as this international market falters, domestically, the problems keep piling up. That's right, inside Russia, the pressure is mounting. Economic growth has stalled. Banks are under strain. Imports are increasingly limited to what China still allows through. And while the Kremlin continues to project confidence, the signs of stress are unmistakable. Shortages of industrial components, rising inflation, and quiet admission from officials that the situation is difficult. China, meanwhile, is managing the fallout with strategic restraint. By keeping its distance, Beijing has preserved its global image. It continues to call for peace, maintains ties across geopolitical divides, and avoids direct entanglement in Russia's war. This posture allows China to remain engaged with Europe, court partners in the global south, and sidestep the kind of isolation that has crippled Moscow. To many observers, China appears to be playing both sides. That perception is accurate. The strategy offers clear advantages. It keeps sweeping Western sanctions at bay. It allows Beijing to present itself as a responsible power, one that avoids direct military involvement while quietly benefiting from Russia's desperation. Every barrel of oil it buys comes at a discount. Every deal is tilted in China's favor. Russia, with no leverage left, accepts the terms. Yet this calculated distance also prevents the relationship from deepening. The no-limits rhetoric once suggested a bold counterweight to Western influence. Today it reads more like a slogan than a strategy. For Western capitals, that shift matters. The urgency that once surrounded the idea of a China-Russia axis is fading. What remains is a transactional arrangement, lacking cohesion and built on convenience. Remember when we said that this slow abandonment has huge repercussions? Well, this reset of sorts is already influencing global politics. In Central Asia, leaders who once feared being caught between Moscow and Beijing now see Russia in decline and China in control. That gives them room to maneuver and reason to lean towards Beijing. In Africa, Russia's influence through military contractors and resource deals still lingers, but China's economic footprint is broader and more stable. In the Middle East, both powers have courted Iran and Saudi Arabia, yet China's financial clout gives it the edge while Russia struggles to keep pace. For the West, this evolving dynamic presents both opportunity and complexity. Russia's isolation makes it easier to contain. With fewer allies and shrinking trade, Moscow is less capable of projecting power. But China's careful positioning makes it harder to isolate. Unlike Russia, Beijing still presents itself as a global partner, a source of investment, and a participant in international institutions. That makes it more resilient and more difficult to counter. On the other hand, for Russia, this is more than just a disappointment, it is a strategic collapse. If China won't be the lifeline, then who will? Iran and North Korea may offer weapons or buy discounted oil, but they cannot fill the trade gap or provide the technology Moscow desperately needs. They simply are not economic substitutes. They are just reminders of how far Russia has fallen. Russia now finds itself more cornered than ever. And for Putin, it's a nightmare scenario. He cannot admit it publicly, but the truth is clear. Russia has no equal partners left, only transactional ones. Countries that will take what they need and disappear when the cost becomes inconvenient. That is the bitter reality of the New World Order Moscow thought it was shaping. Instead, it is watching its closest ally walk away. This slow-motion breakup is not just a bilateral drama, it's a global signal. Countries everywhere are recalibrating. Europe sees an opening, proof that sanctions are biting harder than expected. Washington sees confirmation that Beijing will not burn its bridges with the West just to shield Moscow. And middle powers like Turkey, Brazil, and Saudi Arabia are rethinking their alignments in a world where Russia looks weaker and less reliable. Inside Asia, the shift is even more strategic. Beijing does not want to be dragged into Moscow's war. Its focus is elsewhere, in the Pacific, in its competition with the United States. The last thing Xi Jinping wants is to burn political capital or lose market access because of Putin's miscalculations. That's why China is quietly adjusting. Sensitive exports are being scaled back. Dialogue with European leaders is increasing. Trade with the West remains open. It's a balancing act, supporting Russia just enough to keep it afloat, but never enough to jeopardize China's global ambitions. So where does this leave Russia? Trapped in a partnership it doesn't control and bound to a global power that's slowly stepping away. China will keep buying, but only at deep discounts. It will show up for photo ops, but not for bailouts. And as the war drags on, that distance will grow. The idea of a no-limits partnership was never about friendship. It was about strategy. And right now, China's strategy is survival. That leaves Moscow with no reliable partners, a shrinking economy, and a future shaped not by its own ambitions, but by the limits others have set for it. The breakup won't be allowed, but it's happening. And for Russia, that is the real crisis.